Welcome everybody to Mosman Oil and Gas presentation. John Barr will be. Welcome everybody to Mosman Oil and Gas presentation. John Barr will be answering questions after the presentation. I'll be presenting the technical aspects of the presentation. So let's kick straight into our revitalized activity this quarter. We've been busy and we're going to continue to be busy drilling wells and workovers the rest of this quarter. Disclaimer you can read at your leisure. So for those of you that are not familiar with Mosman Oil and Gas, we are focused on conventional oil and gas exploration onshore where the costs are reasonable, from exploration through to development and production. We have identified and continue to identify opportunities with cash flow, but also upside opportunities. So far, we have established a strong foothold in Texas, USA. The Stanley project, we have 3 wells. Greater Stanley is extending on the success of Stanley into the surrounding areas. We have 2 other projects in Texas and 1 in Oklahoma. And we have a producing field in West Texas, which is currently for sale, but it's been a steady producer for us. We'll talk more about that later on. And as part of the time that we've been there, established a strong partnership and identified production development opportunities in Texas, in the area where we're active. What we have retained from our exploration portfolio is very highly prospective acreage in the Amadeus Basin in the Northern Territory. And we'll talk a bit more about that later on. Now, obviously, the world has been affected by the COVID pandemic, and Mosman's not immune to that. We were decisive in taking action early in March. We significant cut in costs and further resolve to focus on the eastern Texas area that has lower operating costs and higher margins, and we believe significant development opportunities that we can afford to develop, and that other assets are available for sale. We sold Welch with a non-refundable deposit. That sale did not complete, but we kept the deposit. Quite a good result, because now oil price has increased. The field is now worth more, and the deposit is useful cash injection. So we are now happily operating whilst the oil price is lower, it has stabilized at $40 a barrel, and that is a healthy oil price for Mosman in the low operating cost area that we're focusing on in East Texas. So look now at the assets. This map gives details of each of the assets and the location, and you can see our focused area down there in southeast Texas. Now, the advantage of that area is this infrastructure, multiple pay zones, and established production, a lot of data. What we are doing is using 3D seismic data to find the opportunities that have been missed by people not using 3D data. In particular, the Stanley project has been very successful. Three successful wells out of three wells drilled, and we're looking forward to the drilling of another well there in the near future. You can see from the map that the area is close to infrastructure of roads, so it's easily accessible, and that's been a very good core project for Mosman, and has been key in building our production base. So Greater Stanley is adjacent to Stanley. You can see there that we have been able to obtain lease areas next to Stanley, and we're progressing the technical work and the various approvals to actively develop and redevelop that area. Champion is a key lease for us. It's where we have significantly higher working interest, with a 60% working interest compared to the Stanley area is generally around the 16% to 20% working area. Here at Champion, we have 60% working interest. We've been keen to drill the Falcon well. It is in a productive area, in a target that we think has been missed, but it's surrounded by producing wells. So it's well-established oil and gas production area with a significant prospects identified by 3D, and we look forward to drilling that in August, September. Challenger is another permit that we've been able to put our foot on, and that is something that we will look to reinvest cash flow from these projects in due course, but it's held by production. A small amount of production is significant to hold that lease, so we can develop that when it suits us. Looking at the history, you can see the production build-up that has been part of our strategy to build production. We have had a setback in the last quarter with combination of COVID interfering with operations. Texas is not unaffected, but we are able to have some ongoing operations. The operators have, however, also have a view that they prefer to produce the wells at higher rates when the oil price is higher. So as part of the joint venture, we go along with that. So combination of factors have reduced the production last quarter, but we believe that is a temporary phenomena, as we'll show you when we look ahead. So that's both on the gross production and on the net production, similar profile, but there's the data there for those of you interested in the numbers. Looking forward, Stanley, very low operating costs. These wells either flow naturally or require minimal gas lift or pumping to increase the production rates. Modest facilities, and they're happy to have a operation that provides significant cash flow even with oil price in the $40 level. Greater Stanley, there's a range of activities that we plan at Greater Stanley. The first one we expect to kick off before the end of this month. There's a well which has been producing from a deeper zone. We're looking to recomplete in a shallow zone. As with Stanley, we've been able to find shallow zones which have been bypassed, not produced before, and provide good production rates. So that's the target in the Greater Stanley operation coming up. Moving on to Falcon. This is the location for Falcon. The local contractor is on site today to provide quotes for work, and once those quotes are accepted, the work can proceed. So there's It's level ground. It doesn't require a lot of site preparation. And then we are working with the rig contractor to finalise the drilling dates. The Falcon is key for Mosman, not only because of the one well that would be a significant increase in production on success, but also because there are numerous other prospects identified in this champion project, including Galaxy, where we've also have an identified well location. After Falcon, we look forward to then drilling follow-up wells at multiple targets in this lease. So it's a very significant lease for Mosman, and we're pleased to have the well funded and progressing. So looking ahead, if we then look at the medium-term potential production for Mosman, you can see that Falcon is a most significant contribution in our medium-term plans, along with Stanley 4. Now this projection does not include Welch, because Welch is available for sale. If we continue to own and produce Welch, then that would add again to the medium-term projection. So I think you can see here both steady growth and significant upside in the near future. Now, the other area which has had some good publicity recently with Central Petroleum, who is has most of the permits in this area, recently providing an update in their press release. Mosman has 2 key permits here, as you can see, surrounded by production and exploration prospects. So we are pleased that we recently applied for and obtained an extension on the work program. Site work has been delayed because of the COVID pandemic. The local communities are not keen to have people coming interstate, and so there is a pause while those COVID-19 issues are sorted out. But in the meantime, we are pleased that Central has released information about the surrounding prospects, both in a range of reservoirs, a range of targets, which reinforces our view of both significantly large prospects here, but also multiple reservoirs and multiple seals. But the really exciting potential is the sub-salt. There's a lot of oil and gas that is being discovered around the world related to salt tectonics and the salt seal, including the Gulf of Mexico and other parts of the world. But the salt seal is also significant because it can seal helium, and some wells in this area have had a significant helium content, and that's important because helium is 10 or 12 times the value of hydrocarbons. So helium content adds significantly to the value of what are already extremely large prospects in this basin, and we look forward to progressing the exploration program in due course here. And we are actively talking to other parties about farming in. We successfully farmed out EPA 155. That permit requires native title grant of the local community to approve the grant of exploration, and the group that we have farmed out to has experience in obtaining that approval, and we're very happy to get a carried interest in that permit. But EP 145, I think, is the particularly attractive in the centre of the basin, and the Mosman technical work has identified subsalt potential, and that other parties recognise the significant potential, and we are continuing to talk to them about farming arrangements. So to wrap up, we have a strong strategy that we are steadily following, and we are delivering on that strategy with production focus centered on Stanley in Texas, where there's low cost and providing cash flow. We have made sure all of those opportunities have significant growth attached to them so that we can continue to organically grow the company. We've got significant activity in the next quarter with both drilling and workovers, and the Amadeus Basin in Australia has significant upside that we are very happy to have in our portfolio. So we continue to strengthen and expand the portfolio, and appreciate your time today to be able to explain the strategy and the delivery from Mosman Oil and Gas. Thank you.